Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, January 20th, 2021. What we'll do in this video is start out with a brief update of the U.S. equity markets, and just to look at the indexes and the market-leading FAANG stocks. That's where we're seeing a lot of the gains today. The FAANGs are having a strong day. And then we'll roll into some of the recently highlighted trade ideas, including Bitcoin. I just did an update yesterday. The coal stocks, energy stocks, and ag input stocks. Mostly, for the most part, I've been primarily focused as far as trading opportunities go on individual sectors and commodities versus individual stocks. Although there have been quite a few of those mentioned, particularly when I go down into a sector like the coal stocks or the ag input stocks. So I'll kind of give a broad-based overview on each of those industries because they tend to, like I say, birds of a feather tend to flock together. So if you find a bullish or a bearish sector, you usually, and depending on that individual sector, sometimes you have a higher correlation of the individual components in one sector versus another. So, and I try to talk to that when I go over those sectors. All right, so a quick overview on the stock market. It's a decent update, about 1.5% in the S&P 500. We still don't have, nor have we had a decent sell signal on the daily time frame. We looked at little breakdowns in 60-minute time frame, trend line breaks, support level breaks. But the last time we had a almost sell signal, a potential sell signal, was back here when we put in these bearish engulfing candlesticks on both QQQ and SPY, but we never got the follow through. I wanted to see additional red candles, and I wanted to see those red candles take out the previous lows, which in this case are the low of the bearish engulfings, and that was 364.24, which never happened on SPY. It never looked back after that bearish engulfing. And then comparable level on QQQ, there was a bearish engulfing. I'll circle that for you so you can see it there. Same day. And again, same story, no follow through. We had a green candle the following day and never was able to take out the that bottom of that bearish engulfing, which for me would have confirmed that as a sell signal. So that's where we remain in an uptrend. Divergences continue to build. There's been no change there. That's the thing. Divergences, just like overbought conditions, can continue to build for a long time before they actually set in as a trend reversal. And so that's what we're waiting on, at least something half decent. And I still think it'll be one of the things to look for would be a move below that low, about 305 on QQQ, and the comparable, whatever the comparable level is on SPY. And what I'm referring to is, we kind of traded around for a while in this area, and so therefore, or more so, I should say, more recently, right there. That's that trading range right there. We popped above it today, so that's near-term bullish, especially if that holds. We build on that, and so that's why I said a move back down below. And that line, that low where I have that line again, is about 305 on the Q. So that's that. And another reason the Qs are strong is they held support. In a video about a week or so ago, I highlighted the market leading what I call FAANG stocks. That's FAAMG. I don't have an N in there. Although Netflix is now, bigger company than it was a few years back when, that was a big buzzword, FAANG with an N. But the market leaders are Apple, in this order of market cap, that is, Apple, Microsoft, Amazon, Alphabet, and Facebook. Those are your 5 largest companies in the NASDAQ 100, and most of those also top components of the S&P 500. So the other, last week or so, I mentioned these key levels here in the yellow lines need to be taken out to get a sell signal. And Apple, after a couple weeks of bouncing on that 125.75 level, we're still there. We're still just above it. A nice day today, good lift in Apple, about 3.6% right now. We're below the trend line, so Apple is kind of pinched. It did take that trend line out, so it's still has the potential to roll over here, and I still believe it will. I'm going off technicals, guys. I know the market is extremely resilient lately, but I've been doing this many years, and when I see big divergences like this, negative divergences on Apple, see a trend line break, and again, the benefit of the doubt line was 125.75 because that was horizontal price support. There were a lot of key reactions there, some around there, and that's it. So we're kind of bouncing in between there. We're going up, looks like, for a back test, and we could back test the trend line for a while. Hey, we can even continue to extend these divergences. That means move up a lot higher. But until unless 125.75 goes, along with those comparable levels I told you on Microsoft, really my big levels in yellow here, about 199. Again, all covered in a video a week or so ago. So we're above those key support levels on the big FAANG stocks. 1243.50, or I'm sorry, 2943.50 on Amazon is the yellow line, the big one. We had this potential triangle pattern. It's not the best to find, but it's there and it's worth watching. And you can see that Amazon cracked below it, but not impulsively at all. I always talk about a breakout. You want to see it impulsive selling. So there was a triangle pattern I had, cracked down below it. And what I'll do right now, I'm going to take this trend line because it was not impulsive. And more importantly, I always talk about BOD lines, or I call them BOD, benefit of the doubt lines. Just below that, we had that 3086-ish support. And I'm going to pull this trend line down now, modify it, and what that does, it comes in nice and clean and captures all these reaction lows. Before I was getting the body of this candlestick right here. Now I have, starting out on that late September candle, mid-September, I come into the bottom of that one and I catch these recent reaction lows. So strip everything away. Again, this is what I see and when I look at Amazon. Is this triangle like this now, and that's the way I drew it there. So it's still in play, and break to the upsides bullish, break to the downsides bearish, but again, the key levels are the yellow levels there. And Alphabet, the big line is about 1706, still above it. And so, nothing's changed. Pushed up, made a marginal new high, still a divergent high. We had divergence way back here at that high, minor correction, and now the divergence is just bigger. So that's it. So we're in an uptrend, zero sell signals. Tesla seems to, have stalled out lately. Maybe it needs to recharge its batteries. It's, it's up today, but not much, kind of moving sideways recently. And there's the trend line to watch on Tesla here. I'll color that yellow because that's the level to watch. That's about it for the big FAANGs. And this post from this morning, I'm still very much keeping a close eye on the dollar and the euro because of that extremely tight correlation. I mean, this has been one of the strongest correlations that we've seen in a long time. And it's typical too. But there are times, like I said, you can disconnect between the correlation. What is disconnect? One goes up, one goes down. In other words, we went from a strong positive correlation in the euro and the stock market to a pretty distinct negative correlation or inverse correlation. Stock market from this point's been going up. The purple line, I'm sorry, the euro's been oh yeah, this is the chart I had labeled wrong the other day. So I'm did it again because I had these on the chart platform. I got to clean that out. The purple line is the S&P 500 right there, SPY, and the white line here is the euro. Euro's been moving down, and the market's been moving up. Back here, and again, don't look at the difference between the two. It's when one's going up and going down. This is, there was a gap here, because remember, they're priced differently, but they were both moving in sync at that time, even when you saw these separations right here. That's it. So there was a disconnect right there where the S&P went down a little bit, euro went up, and what happened? There was the mean reversion. S&P 500 played a quick game of catch up, but then you can see oops, I don't know what's going on there. I'm toggling something back and forth. Oh, there we go. I was rolling the scroll wheel on my mouse. So I was going through these photos. All right, that's it. So look at inflection points, major high, major low. They both peak and turn at the same time. They top and bottom around the same time. And so far we have a top in the euro. Now, again, maybe just a little correction in the euro. Maybe not. The charts to me indicate more downside in the euro, more upside in the dollar, and if that is the case, then the larger this divergence gets, the bigger the mean reversion is. What's a mean reversion? Well, when two things come back together to where they normally are. So mean reversion can come in the rally of or in the form of the euro rallying. That's the white line. The S&P falling, or a combination of both. And the more this happens, I think, the farther they get apart, the bigger the mean reversion is going to be. And other than that, there are periods in time where you've seen a disconnect, where all of a sudden, you've had this tight correlation between two different asset classes, and then all of a sudden they're no longer correlated. I'd put about a 10% chance at that, and about a 90% chance we're going to get a reversion to the mean. And I think it can come pretty quick when we get it. And again, as mentioned below, this is this morning in the update. There's our primary trend line. This is the euro, and it's really just the dollar upside down for the most part. We're very close to it, the dollar index. And so that's it. We've been walking lower, and as I said this morning, we need to take out that previous reaction low. Doing so will clearly take us below my second target, which is support. And it'll also take us down below, as I mentioned this morning. We have a little minor downtrend line here that was taken out the other day. So, look, I'm going to tell you right now, the case can be made for either way. So if the mean reversion is going to be a continuation of the rally in the stock market, and then the euro turning around and rallying from here. In other words, like I said the other day, maybe the correction in the euro is over. It's not my preferred scenario, but look, got to be open to it. If that's the case, you had this downtrend line right there. In the euro. You put in, at least on the PPO down here, as I mentioned the other day, you had some positive divergence. We broke out and we back tested. A little divergent high when we after the breakout, and that probably was the catalyst for the technical catalyst for this pullback. But to me right now, it's a big level I'm watching, because the bullish scenario would have this being a breakout of that falling wedge, back test, and then this happens, and we say the correction's over, and we see a pretty strong rally in the euro, a pretty big drop in the dollar. That would support additional gains in the stock market. Should we go much lower, again, we take out yesterday's lows, a couple things going to happen. Let me clear out the lines. Should we go down, take out yesterday's lows like this, we're going to have fallen back below that trend line right there, this downtrend line I just showed you. So that means this whole thing was a false breakout, and of course we break that support reaction low, where we clearly put my T2 target in the rearview mirror, and that should open the door down there. Anything's possible, but I would be really surprised to see that scenario play out without it putting pressure on the stock market and some of the other dollar sensitive assets. Now let's roll into that. I talked about dollar sensitive assets, one of those being, give you a chart yesterday with the extreme strong correlation, same thing between Bitcoin and the dollar, or again you can use the euro. And Bitcoin is down today, down 5%, and so that meshes with, remember, the euro is still down. We've had a little kickback rally, but right now E7, the euro futures, are down 0.16%. And let's see, the dollar index, there's other currencies in the dollar index, and that's flat right now. There's the dollar index. But back to Bitcoin, down 5%, and that will almost certainly continue if the euro continues to fall and the dollar continues to rally. I gave you two trading proxies where I said you might get more bang for your buck, plus they had more clear charts. One of those was Riot, the other was Overstock. Riot has briefly, it broke down today below the price channel I gave you. This is an ascending price channel, but we're right back on the line. What you'll need to see, if Riot can regain it, all that means that's an intraday pop. You can call it a whipsaw, but it's not even a bona fide sell signal until you get a close below there. Sometimes you can take that short entry, but if you do, and you get back above the trend line, especially above these previous two candles, you want to cover that short, because that means that's just a whipsaw signal. Just like this, there's an intraday break right there. At one point during the day, you were below the trend line, and then you managed to close back up above it right there. So that's what we're watching, a potential sell signal here on Riot. And again, it all ties back into that euro US dollar chart I showed you. If the euro is going to take out those lows from yesterday, you're probably going to see Bitcoin, more downside in Bitcoin, and then Riot, as I mentioned, a lot of meat on the bone on this one. To that target I gave you the other day, about over 50% if it gets there. Overstock's already started to play out. I mentioned that one as a short entry back here, as I covered in the video yesterday, and we're already very close to that maximum target. I gave the final target of 42.41 back to resistance. So same story. If we can if the euro is done, the correction's over, and the euro is going to rally, then you can see more upside in Bitcoin and these Bitcoin proxies because of their correlation there. All right, next up. Okay, those were some potential short setups, as was the energy sector. I'll get to that in just a second. Yeah, let's do the shorts first, and we'll get to the longs. I'll do updates on the coal stocks, ag inputs, and energy. We'll start out with energy. Energy was, gosh, it seems like forever, but it was just a few months ago, right before the elections. That's, I mentioned, is one of the most bullish, or the most bullish sector, setting up in the S&P 500 with these nice, clean, beautiful, bullish falling wedge patterns, positive divergence, same old stuff, wash, rinse, repeat, broke out, and I believe the bulk of the run, if not all of it, is already been, from what the charts were indicating. And so at this point, the risk reward has flipped from, being bullish or long to short. Give you, a potential scale-in zone if they don't stop here, which is what I think is worth, adding some short exposure. Again, if you're aggressive, 71.53 that was mentioned last week, and you can see so far that's where we're stalling out. And you have, the tech stocks are strong today. The FAANGs are strong. The broad market is up. Most sectors are positive today, except energy. You're down, almost 1% in XOP. At that resistance level. I already went over the charts the other day, quite a few, the individual setups or how each of the stocks look, so I'm not going to spend too much time there. I just want to do an update and mention that so far so good, that those resistance levels on XES, that line should be a little brighter, the levels are capped out. 55.44 is the resistance that was highlighted last week we were at. And so far, rolling off that, PPO is starting to turn down, and I mentioned that this morning too. I consider divergences potential when you have the indicators like the PPO here making lower lows against prices, making higher highs, but I consider it confirmed once you get that bearish crossover at a lower level, because that effectively puts in a lower high or a lower peak in the indicator, and that is again what I call the confirmed divergence. So it's right there. Any more downside from here, we'll have that divergence confirmed. And there's a homepage post on XOP was the one I kind of zeroed in on as my favorite the other day because of after going through all the individual components. But again, XOP, XLE, and XES tend to move together. XLE, you're going to have more of an impact on the this is really the basket of stocks I believe that are accounted for in the S&P 500. It's big oil. I think those smaller, lower tier companies will like an XCS, the oil, the services, and again the exploration and production stocks that are in XOP. I think they'll lead to the downside. They usually do whatever XLE does, but at a bigger factor, larger gains because they have smaller companies with higher growth rates in there. And I just want to mention, if you're going that route, if you are a counter trend trader, aggressive trader, and you're taking a shot here, scaling into drip, the targets I laid out at this point in time, I just want to say this is my preferred swing target. All other things being equal, depending on what's going on in the market at the time, that's where, if and when we get there, I'll take profits. And again, we're right about where we were last week when I posted the chart. We're up a little bit. I think it was just over 17 a share. So it's actually, with the market heading higher, this is a short trade that's actually gained. In other words, the sector has dropped. And that's pretty solid resistance, and I expect a reaction there. I just want to say, so that 63% gain is from where we were last week when I highlighted it, and it's 63% because this thing is leveraged up 300%. It's quite a bit of leverage, so keep that in mind if you do take drip. I pass that along because there are those that you have accounts that you might not be able to short in, or you might not be able to, maybe you can short but you can't get any shares of XOP or the individual oil stocks. So that's, again, a way to go. Okay, and just to rifle through the coal stocks, I mentioned these before. Oil and gas, I was first, as far as energy goes, bullish on these coal stocks. Quite a bit of updates, and most of those are up anywhere. Most of them are up triple digits, 100% or more. Off the bottom, I'm trying to recall where exactly I started highlighting these, but this one's rallied, since May, April, May, about 100 something percent. Even since this breakout right here, that would have been an objective entry, still about 50%. But here's what I want to do the update. The bulk of the gains, I believe, if not all of them, are in on this sector. So it's time, if you're still in these, and I know quite a few people on the site took them, time to start reeling and taking some profits. Why? What am I looking at here? Same thing as oil and gas. Even though this sector bottomed first, it has well, you know what, they run them roughly together because they're coal obviously is a competing energy source for oil. If oil prices get high, it's obviously going to make coal prices more attractive, all other things being equal. Yes, there is a lot in the political arena with coal because it's not it's clean burning, et cetera, but again, they tend to move together. And I just want to mention we're at resistance here, pretty significant resistance on not just HCC but a lot of these. There's an uptrend line I should add as well. So if you're in HCC, you're a believer in energy, you're a believer in the coal stocks, and you want to let it run, well, there's your stop. Somewhere below that trend line. If that trend line breaks, a solid break below there will probably send it back down to any or all of these price targets that were hit on the way up. And just to rifle through the rest, same story. I'm just trying to hit on common themes. I know I'm talking fast, but reaction high, reaction high, reaction high. So common theme is, a lot of the meat on the bone. Possibly all of it has been milked. If there is more upside, here's a trend line that may come into play, and I think will if we head any higher in Arch Coal or Arch Resources now. They used to call it Arch Coal. And then final target that I always had on there was $69. But again, with the oil stocks at resistance and a lot of these coal stocks at resistance and negative divergences, again, it's not just resistance. That's why I list multiple targets on the way up. Each one is where a reaction's likely. You can book profits, take some off the table, all off the table. But yet, when I mention additional targets, it means that's usually just a bump in the road, whereas once you start to get in, overbought, you get these divergences and you hit those or get near those final targets. That's usually where you look for the end of the run, get out of those longs, and consider maybe going short for the next trend in the other direction. All right, ARLP. On face value, this breakout is bullish. I'm going to say that. And what I'm talking about here is, break above that reaction high, that reaction high. It's certainly in an uptrend. There was this bullish falling wedge. There was a breakout right there. It was good for about, almost 100%. But, breakouts that occur on overbought conditions with negative divergences, from my experience, have a much, much higher rate of failing. And so I believe this will probably prove to be a false breakout, aka whipsaw signal. And there's a little minor trend line that, if broken, can bring this one back down, probably all the way to 385. So, I'm doing this to not just cover the sector and give updates on those long, but consider these trade ideas. If you think the energy sector has pretty much made most or all of its run for the time being, that'd be about a 30% drop back down to the 385 former target, now support. SXC, still in an uptrend, has been for a while, moving up, higher highs, higher lows, but again, coming up on big resistance there. That was my final target. Still would be about 647. I'm not in this. I'm short the energy stocks, but this was another one, BTU. Big resistance right there. And again, common theme. That's why I cover all these. It helps support the case that energy is likely due for at least a pullback, at least a tradable correction. I'm talking double digits. Energy stocks move fast. You're not going to get a 3% correction. That's a daily swing in most of these. Looking at, I believe if this plays out, a pullback, for example, on BTU, we hit that 441 target as big resistance. I could see a back test here, the downtrend line plus that 252 level support. That's about a 43% drop if we got it. So you could still be longer term bullish on energy, or at least on coal in this stock, and see that big pullback like that, and then come on up here to hit that potential long term target there at about 867. CTRA, another one at resistance. Common theme here. This is a big old, very obvious gap right there. We took out, and I think I mentioned at the time, we took out the downtrend line 942. I said that was bullish and would open the door up to my next target at 1411, and that was hit. And that was good for another, almost 50%, about 48% since that breakout. And I can't remember, but this is probably where I first highlighted this one back here, breakout above that trend line, and then a break of 494, because I was covering these back there. And, if you're in it, you took it for about 180% ride, but you're at resistance. And just like the oil and gas stocks, I see at best, if there's a little more upside, it's relatively minor. I mean, that's a nice run from $14 to $18, don't get me wrong. But relatively speaking, relative to this whole thing, it's picking up nickels in front of a steamroller because that's big resistance. So this stock is likely to turn down either here at the bottom of the gap or at the top of the gap. Okay, a few more and we'll move on to the next thing. CEIX, again, not to beat a dead horse, but just try to confirm, my analysis. About 993 right there, big resistance, and we're at it right now. Again, these are all coal stocks. I'm just rifling through the list. A lot of these at previous reaction high. This one's pulled back a little. This one's actually at support now, but again, you can see what happens. It hit resistance. That was a target I had here, 29.51. There was the breakout right there. That was a rally of about 64% into resistance and rejection and pull back to support. So this one's already turned. Maybe it rallies off support, but again, if the majority of these stocks pull back, that one's likely to as well. All right, we'll leave it here. I think that's it. Yeah, HNRG. This one had multiple lines, and that $1 level was the last breakout, and it rallied about 75% from there. Okay. Let's see. Oh yeah, we'll hit on the ag inputs. I'm not going to go through all of them. We'll just do a few of those and then hit on gold and wrap the video up. Okay, another sector that I've focused on in recent months for long trade ideas was the ag input sector. Was first bullish on agricultural commodities, have been throughout the year, throughout last year and into this year, and said ultimately you'd probably see that spill over into rallies in this sector, the agricultural input stocks. There's various types of ag input stocks. Some are fertilizers, the other things in there. But I want to do updates here. This one, MBII, broke this downtrend line right here. Buy signal there, back tested, set up in this downtrend line. Again, just update, all covered in the past several times in videos in the last few months. Breakout right there, that bullish falling wedge, and it took out just recently took out my 152 target, and that's bullish now. And I don't see much. There's some potential divergences forming, but this one has a lot of momentum. Could head up to that 182. I would just trail stops up in this. This is one of the sectors where there's a little bit more diversity among the components. GDX, gold mining stocks, the gold mining stock sector ETF. They're all going to go up and down with the price of gold because it affects their bottom line directly. And in this sector, like I said, they make different products. Some of these do. And so, you can trade each on their individual charts. But at the end of the day, if the majority of these stocks are bullish or bearish, then, you're going to have a headwind or a tailwind to those trades. Let me see which other ones I wanted to cover. I don't want to hit on them all. Just an update on YTN. This one was mentioned, I think I mentioned it the other day. No, I mentioned it right here when it broke above 842. That was a big level, big resistance right here, the yellow line. And that so far in just a few days, a week or so, it was good for about 90% from there. Also took out that 1090 level. So that's looking good longer term. But again, trail stops up. I think we're getting a little frothy here on a lot of these. All right, I had a phone call there, sidetrack. That's it. So that's like I said, time to tighten up stops. Let them run if you want. With a lot of momentum in this market, a lot of momentum in this sector, and or you can start peeling off profits. So one way to do it, instead of just trailing up a stop or periodically raising your stops, is sell down. Sell off your profits. If you have 100% gain on a stock, if you put in $10,000, you're up to 20,000. take 10 off. Let the original 10 run. That means if it went to zero, you didn't really lose anything. You broke even on the trade. Now these aren't going to go to zero. Anything's possible. Well, these low price ones, that is more possible than others. Take that back. And then last but not least, gold, silver, GLD. Nothing has changed for a long time. I've remained, consistently long-term bullish on gold for last few years. It's in a bull market. That's unarguable when you look at this long-term chart, a weekly chart. However, back here when gold hit this major resistance, that's when I mentioned, closing out all my long-term, swing and trend positions, expecting a correction, which we got, and then to come full circle again. If you're, not up to speed on the analysis, back here on that would have been, it was the day of the low, so it was November 30th. I mentioned, time to start scaling back into gold anywhere from the top to the buy zone where we were at that day down to the bottom. Now, we never even made it anywhere. We hit the top of the zone and gold rallied. And I maintain that longer term, but near term, I haven't been doing a lot of updates on it because turn off all the lines. We're still in a downtrend, and it's mostly a sideways move lately. You can see we've just been going sideways. We're still up from where I mentioned scaling in, and I still maintain that for longer term. Trade investors really, or trend traders. Scale in. What that means is, ideally, if you can buy in objectively, buy on pullbacks, great. Down to, but not below that buy zone. So nothing's changed there. Very near term. If you're a more active trader, let me pull up my gold futures chart. This is what my 60-minute chart on gold futures looks like. I gave a heads up back here that gold had put in a divergent high on the 60-minute chart, just like it did back here and just like it did right here, and showed that correction coming, scenario like that. That was hit. I mentioned it right when it was hit. A little bounce trade if you wanted, and we got the bounce. But then we went on to take out the trend line. Once we broke the trend line, boom, big down, and we've been in a downtrend. But most recently, we put in a divergent low. So that's 60-minute chart will give you these swing trading opportunities. Trend traders, long-term investors shouldn't be too concerned with this, but that's what I like to look for here. You can see positive divergence. There's your divergent low, negative divergence, your divergent high, watch, rinse, repeat. So that was the most recent buy signal. Big support down here. The other thing that happened is that 1821-ish to 1825-ish right there. It's a support zone. It was briefly taken out, but we snapped right back above it. So that was what we call whipsaw signal, or a false sell signal, and that's quite bullish. So it puts the near-term outlook of gold bullish, and I know that contradicts with the outlook, the bullish outlook for the dollar, because usually when the dollar is falling, gold goes up, and vice versa. So look, I may be wrong on the call for the dollar and the euro. I've done extensive analysis on that. I'm still longer-term bearish on the dollar, longer-term bullish on the euro, but short-term, it's the other way around. And now, like I said, there are times where gold and the dollar can both rally. So, in the correlation hasn't been as tight as it has been in the stock market and Bitcoin. So, like I said, I'm not. My convictions aren't super high on gold. It's very near term, looks bullish. We put in that divergent low. We just took out these recent highs, but I've kind of been staying away from that trade, focusing on other things, and overall kind of keeping it light. I'm just not seeing a lot of objective trade ideas, a lot of objective long entries or short entries. I see a lot of setups, many that are untriggered, like I went over with the FAAMG stocks earlier, and some other things. And then there are the what I call aggressive entries like XOP or DRIP, where you don't have a sell signal. I want to make that clear. This is an extremely strong uptrend. I'm sure there's some people think I'm smoking crack, wanting to short the energy stocks because that's one of the strongest uptrends in a while. But there's two ways that I find it objective to enter a short trade: either a rally into resistance, again, as I said earlier, not just because we're at resistance, but I need other indicators, other things saying, okay, we're likely to reverse off this resistance level, a meaningful reversal, not just a little brief pull back, and then a punch up to the next level. And again, you can either keep stops tight if you take a trade like that, and take quick profits, or let it run. There's many ways to trade, or you can do what I mentioned before, scale in from about 71.50 up to about 80.35, and not above that level. You can have a stop a little bit above it in case they try to pop it through, and have a little false breakout, whipsaw signal, stop raid, many names for it. But you wouldn't want to add past that, because ultimately that would be bullish to see a breakout above that level. And if we got it, we'd probably have burned through the divergences at that point if we get it. So this is still what I favor. And again, objective short entry, because you're shorting overbought with negative divergence at resistance. And like I said earlier too in the update, you want to narrow it down, hone down to a more precise entry, or get the next sell signal or objective entry. Again, there's no sell signal. I want to be careful on that, my words. Shorting into resistance, that's not a sell signal. A sell signal will come on a break of support right here. And that would be about, call it 68.90 right there. That's that recent, that's what's contained all the prices. And we have this little wedge right there. We broke the wedge, but again, it's all about what I call the BOD line right there, the benefit of the doubt. That horizontal support is just below the uptrend line, and when we broke the uptrend line, it's not been very impulsive so far. So that's why I think that break of 68.93 will do the trick. And I think it'll be, if we get it, pretty swift move down. I think there's a lot of hot air in the energy stocks right now. And so it's something that if we get it, you probably don't want to wait a day or two, because we already may be down towards that first target in that amount of time. And last but not least, we'll wrap the video up here. For that to pan out for a decent swing short, we need crude to be a willing participant. Crude oil or the energy stocks are unlikely to correct anything substantial without crude reversing. So here's my 60-minute chart of crude. We had a divergent high right here, had a little correction off it, extended the divergence, another equal high, and now a third. So far, a potential triple top here on this 60-minute chart, and all it's done, the divergence that's been in place has simply extended, so we still have negative divergence. And maybe draw a trend line right here. Yeah, we can certainly add a trend line right there. Let's do that. So this would now be your uptrend line to watch. There it is. So if you're a crude trader and you want to trade crude futures, it's a CL. You could trade USO as the ETN for crude, or there's also, I believe, some leveraged inverse ETNs as well out there. One or two blew up in the last year or so, so I'm not even sure which ones are still trading anymore. DWT or there was a couple of them. Either way, there's your levels to watch, and that also would help align with a trade if you, let's say you just want to stick with those XOP or DRIP, and you want to wait for the next objective sell signal. Well, I gave you the level to watch on XOP, and what you want to see is this as well. So if you get a nice solid breakdown of this trend line on crude, and you get the breakdown on XOP I just gave you a second ago with that horizontal price level, then it's just going to increase your odds that we're going to have at least a tradable pullback here in the energy stocks. That was just a minor, that's first targets right around there for crude, and this is a near-term swing target down there. And certainly the potential for more. I'll have to add some additional longer-term trend lines, but I think that one's going to come in right around that 49, call it $50 level right there. Okay, let's wrap it up here. I'll get the video out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.